If you have $100 right now, you're richer than you think. Not because $100 is a lot of money, but because it's enough to start. Most people don't fail at investing because they don't have money. They fail because they never start. They tell themselves, I'll start when I have more, or investing is only for people with thousands of dollars, or $100 won't make a difference. But what if that $100 is the beginning of your financial future? In this video, I'm going to show you exactly how to start investing with $100, where to put it, what to avoid as a beginner, and how small money can turn into serious wealth over time. Let's start with something important, your mindset. Most beginners think investing is about picking the perfect stock. They think it's about finding the next big crypto coin before it explodes, or timing the market perfectly. That's not investing, that's gambling. Real investing is about building a system. It's about building a habit. It's about becoming the kind of person who consistently puts money into assets that grow over time. Think about going to the gym. Your first workout won't transform your body, but it changes your identity. You're now someone who works out. That first $100 investment works the same way. It's not about how much you make from it. It's about becoming someone who invests. Because once you know how to invest $100 correctly, you'll know what to do with $1,000, then $10,000, then more. The amount is small, the skill is powerful. Now, before you invest that $100, let's make sure your foundation is solid. Ask yourself two questions. Do I have high-interest debt? And do I have at least a small emergency fund? If you're paying 20% interest on a credit card, investing doesn't make sense yet. If the market gives you 8%, but your debt costs you 20%, you're still losing. Pay off high-interest debt first. Second, make sure you have at least a small emergency cushion. Even $500 to $1,000 set aside can prevent you from having to sell investments in a panic if something unexpected happens. Stability first, growth second. If you're good on those two things, now we move forward. To invest, you need a brokerage account. Think of it like a bank account, but instead of holding cash, it allows you to buy investments like stocks or ETFs. When choosing a platform, look for three things: no minimum deposit, low or zero trading fees, and fractional shares. Fractional shares are powerful. If a stock costs $300, you don't need $300. You can buy $25 worth or $10 worth. This makes $100 more than enough to start. Once your account is set up and your $100 is deposited, the big question becomes, where do you put it? Here's where beginners usually overcomplicate things. You don't need 10 stocks. You don't need a complicated strategy. With $100, simple wins. The safest and smartest option for most beginners is a broad market index fund or ETF. An index fund allows you to invest in hundreds of companies at once. Instead of betting on one company to succeed, you spread your risk across the entire market. For example, when you invest in a fund that tracks the S&P 500, you're investing in 500 of the largest companies in the United States. If one company struggles, the others balance it out. Historically, the overall stock market has averaged around 8 to 10% annually over the long term. Not every year. Some years are down, some years are up big, but over time it trends upward. Is that exciting? Not really. Does it work? Yes. And here's something important. Boring investing builds wealth. If you want to keep things extremely simple, you could put the entire $100 into one broad market ETF and stop there. No overthinking. Now, if you really want to experience picking a company, you can split your money. Maybe put $80 into a broad ETF and $20 into a company you believe in. That way, most of your money is diversified and safer, but you still learn how individual stocks move. What about crypto? Crypto is highly volatile. Prices can swing wildly in short periods of time. If you're brand new, putting your full $100 into crypto is risky. If you want exposure, limit it to maybe 10 to 20% of your money. Understand the risk before jumping in. Your first goal as a beginner investor isn't maximizing returns, it's surviving and staying consistent. Now let's talk about what actually builds wealth.
And this is the part most people underestimate: compound interest. Compound interest means you earn returns on your returns. Let's say you invest $100 per month, not just once, but every month. If you average an 8% annual return and stay consistent for 20 years, you could end up with over $50,000. Stretch that to 30 years and you're looking at well over $140,000. And that's just $100 per month, not $1,000, not $5,000, just $100. Now imagine as your income grows, you increase that monthly investment. That's how normal people quietly build wealth. It's not about hitting a jackpot, it's about time and consistency. Time is more powerful than the amount you start with. The earlier you begin, the less money you need to reach the same goal. Now let me save you from some painful beginner mistakes. First, don't chase hype. If everyone on social media is screaming about a stock going to the moon, you're probably late. By the time it feels safe and popular, much of the growth has already happened. Second, don't check your portfolio every hour. Investing is not entertainment. Watching your balance go up and down daily will only stress you out. Fourth, don't panic sell when the market drops. Markets always fluctuate. A drop doesn't mean failure. For long-term investors, drops are temporary discounts. Fifth, don't try to double your money fast. Fast money thinking leads to emotional decisions. Emotional decisions lead to losses. The goal isn't to get rich quick. The goal is to get rich steadily and sustainably. So here's your simple action plan. Open a brokerage account, deposit your $100, buy one broad market ETF, set up automatic monthly investments, even if it's small, and then let time do the heavy lifting. You don't need a secret strategy. You don't need perfect timing. You don't need to be a financial genius. You just need to start. Remember, the $100 isn't what changes your life. The habit does. Every wealthy investor once started small. The difference between them and everyone else is simple. They started and they stayed consistent. So if you've been waiting for a sign, this is it. Start with your first $100. Your future self will thank you.